talk a little bit about interest rates. The chart you're looking at on the screen is the last 6 months of the 30-year fixed rate average. As you can see, the rates did peak out in October at about 8%. And then there's been a lot of volatility, on a weekly and on a daily basis. And we are averaging just about 7 or maybe slightly below 7. In today's rates in the middle of February. Now, the point I want to make with this is rates fluctuate quite often, and it can make an impact on your payment. It's also important to know that other factors will impact your interest rate. Your specific credit, your specific qualifications, the price of the property you're buying, and the type of property you're buying are all going to impact these specific rates. So just to see the average daily rate at 7 does not mean that's the rate you're going to get. You might get a lower rate, you might get a slightly higher rate. So it's really important to have those conversations and to do a real comparison. But it's also important to realize what kind of impact that can have on the market and the buyer demand. If you take a look at the comparison chart here on the screen for a $300,000 loan amount, today's rate at 7 would actually save you $200 a month versus October's rate at 8%. And as we look back at the market into the late fall of 2023, it was a slower time period. Now, of course, there's a lot of other factors. Rates are not the only thing driving buyer demand. The seasonality of the market plays into a huge factor, and we know that the fall and winter months are slower. Spring tends to be the best time of year. So I do expect that the demand to drastically increase over the next few months. And if rates were to change and go down in conjunction with that, it would have an even bigger impact on the market. I made this video to simply explain that there is a lot of volatility with interest rates on a daily and weekly basis. It's important to pay attention to where they are at, but of course, the most important thing to consider is how does the rate impact your affordability, and what other factors are involved? Is the price of the property that you're going to buy going to be impacted? It could be. If rates were higher, you're likely going to have less competition and be able to have a better opportunity to negotiate credits, negotiate a better price. So those are all factors to consider when you're looking at the housing market and when is the best time for you to buy a property. Hopefully this video helps a little bit on the explanation of interest rates, and we will see you on the next one. Thanks for watching.